Well, first, thank you everyone for taking the time out of your evening to join us. This is one of the major updates that we will be providing to the Hearthfire income on the Hearthfire income portfolio. We have lots to cover. Lots has happened over the 12 months since we acquired a couple of assets. All good things. Some things happened a little slower than we'd like, but we like to believe that everything happens for a reason, and I think you're going to be pretty excited to hear what we will be sharing. So, without further ado, I'm going to jump in. Let's start with just a quick reminder of the investment offering that you all are part of. Uh, what was a two-property portfolio is now a three-property portfolio. That's the big news that kind of giving you the early insider information. Now, we did discuss this additional property that we've added to the portfolio at our live event. If anybody was in Philly um, last month or November, whenever that was. It's a three-property portfolio. Return targets are 17 to 20% IRR. We like to consider that under-promising with the expectation of over-delivering. Return multiples are currently still being projected to 2.25x, and stabilized cash on cash is 7 to 9%. The business plan is essentially the meat of the business plan is to acquire, increase operational efficiency, and then expand the Laurel and LaPorte locations. The LaPorte Annex property, as I mentioned, we'll talk about that in a little bit. We are very pleased to give you the update on how we're doing, at least on the operational, for the entire project, with the operational efficiencies and enhancements for in-place revenue and rent. We're excited about what we've achieved so far. We'll talk about that. The minimum investment was $50,000. You're going to get an opportunity also to increase shares should you be interested. If at any time you do have any questions, feel free to put them in the chat. And as I see them or Corinne flags them down, then we'll go through the questions. So this one I'm going to spend a few minutes on. So this is the timeline of the project. All right. So big part of it is obviously that orange line going. That is kind of like we are here. Talk about a little bit of what has happened since we acquired the assets. And if you recall, we closed on Laurel and LaPorte January or December and January of last year, respectively. The investment timeline, the equity and debt. Now, the tricky part with this project is that we had a 1031 exchange from our sale of a bird in hand self-storage that we 1031 to acquire the Laurel asset. And then we acquired the LaPorte asset, the first LaPorte asset, for cash. At the time, we were working through entitlements and permitting. Pleased to report that all of that is done. We're fully entitled and permitted on the construction on both properties, Laurel and LaPorte. If you're not familiar with construction projects, it's a long, arduous process with lots of visions and zoning and lots of hearings and lots of drawings and lots of back and forth between the municipalities. So that pain is over. Now, along with that, what we did in our approach to capitalizing these projects was essentially to acquire the assets, onboard the assets while we get the permits and entitlement for the construction, while not encumbering the investment by finishing off the entire raise. And the reason for that is, if we raised all of the capital, a good portion of the funds that would go towards construction would just sit dormant, and therefore continuing to accrue a preferred return, therefore effectively having an overall impact to the existing investors. So we intentionally slow roll this, if you will, in completing the raise, while at the same time navigating the debt markets, which over the last year have been very difficult. We had interest rates that climbed without precedent at the fastest rate in history. Most lenders kind of got onto the sideline for a long period of time, and those that were in the game essentially were offering financing at really high interest rates. We'll talk about the financing where we're at with it, but we're very pleased with our patience in waiting that out. So from a capitalization standpoint, we'll talk about what the outstanding equity is. Those of you that, as you are invested, all of the preferred returns have been accruing. So if you go into your investor portal, you would see the accrued preferred return on your account. So that's always going to continue. That's going to be there and continue to grow. Where we're at with the project is construction financing and finishing off the equity. As I mentioned, we have onboarded and acquired all of the assets with the exception of the LaPorte Annex. We're going to refer to that as an annex because that property is literally less than a mile away from the LaPorte, Indiana property. As I mentioned, everything is done from a construction standpoint, and now we are essentially waiting for probably the weather more than anything to ensure that construction moves forward at a meaningful rate. Obviously likely familiar with Indiana weather. It's pretty cold out there, lots of snow. When you're talking about site work, when you're talking about footers and foundations, now is not the time to be doing a lot of that work. We are pleased that there has been some utility work started at Laurel, and some site work has begun in LaPorte just to be able to get some utility service in there. So we're very pleased with where we're standing on both projects. Construction is anticipated on both projects to be done by the end of the year, followed by certificate of occupancy, and then lease up, and then moving forward. So if you have any questions when we get to construction, our construction team is actually on the call as well. Okay. All right. So just a quick refresher on Laurel first. Located in a growing market. This is not too far from Delaware Shore Point. Great traffic, road, main, I think it's 6-lane intersection there. We have the ability to more than double the net rentable square feet there. So at the end of the day, it's going to be about 70,000 net rentable. The expansion project, part of it actually, some of the rough electrical work had already been started. What you see there on the right is the existing facility. It's a little bit more cleaned up. That was a picture from when we acquired it, and then the rendering of what it's going to look like now. In that bottom picture there, the buildings that we are constructing is that main beautiful building there. That's going to be a 3-story climate control building. And then in the back right, those 3 buildings that are in a different direction than the other buildings, they're the ones that are going to be built. The other ones already in place. You can see that original business plan was to increase rental rates to market by at least 11%. You're going to see that we achieved a significant portion of that. And then the rest of the business plan is to increase the revenue through the expansion. So here's what we've achieved so far to date. So the average monthly revenue when we acquired it was roughly around 21,000. It's now about 24,000. That's an effective increase of 10.8%. The actual occupied rent growth, this is the average rent annualized per square foot. It was at $8.52 when we acquired it, and now we've just reached $9.84. It's worth noting that the self-storage industry had a slow year in 2023. And when I say slow, it came back down to normal rate and demand compared to what we saw in 2022. Through 2021 and 22 were banner years for self-storage. A lot of that mirrored the residential real estate market, where there was an explosive growth and a lot of pent-up demand post-COVID, and a lot of different behavior patterns and usage patterns we saw as well. So by and large, we're very pleased with the performance with at Laurel. Okay. Going to LaPorte, again, this is a tiny facility. It was just those two. It is just those two buildings still currently that you see up at that top image. Believe it or not, the owner is that property that's right behind us, where you can see those buildings. It's a modular home builder. So he owned this property. Really just had storage because of it was already on the land, never really made an effort to optimize the rents, nor develop it. That beautiful piece of land right next to it, that's where the building that we're looking at down at the bottom is going to go. You can see the renderings capture the backside of his property as well there. So this is going to be a two-story climate controlled, beautiful addition to the property. It's also worth noting that you can barely see it, but in the top right-hand corner, uh, we also acquired an additional 8 acres of land that was behind the property. We got it for like 150,000. That was already part of the portfolio, was acquired with the portfolio around the same time. We closed on it a little bit after. That has not been factored into our return projections or our business plan. So we're kind of like keeping that in our back pocket to see how things go with our expansion, and then look to see what other opportunities that we have for the highest and best use for that land. We've considered a Class A boat and RV storage. We kind of did a feasibility study. We don't know that that quite pencils for the cost to build that out, but we're actively looking. We'll continue to actively look to see what opportunities there are with that land, but otherwise kind of keep that in our back pocket as potentially offering that as a value add should there be a recapitalization or an exit event that we have to include. This is the performance of this asset. Now, this is a small asset, and what we knew going into this was the rates they hadn't been changed since I think 2016 at the time, and being that it's a small facility, there's always the fear of increasing rents and driving out tenants. As you can see, that has not happened, right? So we've been able to effectively just about double the revenue in under a year. So it kind of it even exceeds what our own underwriting was on this asset. So it's a fantastic testament to the actual occupied rent capabilities and what we can actually achieve. So what we've been able to achieve is went from $4.56 a square foot annualized to $8.76 per square foot. Now, it's also worth noting that when we talk about the additional asset that we're adding to the portfolio, that the existing rents are even lower than the rents that we had on this property prior to acquiring it. So it's kind of like what I would call cheat codes, right? We already know what performance we can achieve because we're already doing it on the next street. Super exciting. Here is just a table of some of the same information. Just looking at the average monthly revenue at Laurel was 21,000. Got that up to 24,000, so on and so forth. The Annex is at $5,100 per month. So we can effectively, if we can effectuate the same type of increase, you can see what the potential is that we can do with that property. All right, so now this is the new off-market addition to the property. So one of the nice things of having a presence in a market is some folks when they have when they're interested in selling, they will look to other owner operators in the market. And quite honestly, the way that we acquired the first LaPorte property was also off market. That the guy that I mentioned that sold the modular home business, he's actually also a tenant of one of the other properties that's part of our Indiana portfolio. Now, when he first approached us to acquire the facility, he said, well, why is a guy who's renting self-storage with us and owns self-storage, why would that be the case? Well, anyway, the units that he's renting from us are considered, they're called man cave units. So this guy's got, I think, 2 boats and 3 cars in this unit. There's literally a mini kitchen in it. won't go into for you with the details, but anyway, he knew, he reached out as a tenant of ours to inquire if we'd be interested in buying it. We had bought that asset. Now, this property here is brought to us by the trustees of the family. I guess I don't know all the details, but somebody passed away. It's part of a trust, and they needed to liquidate the property. They approached us, and we've been able to negotiate a $900,000 acquisition price, which is substantially below what it would cost strictly based on the existing revenue, let alone what the revenue is, revenue potential is. Now, again, this one here, there's really not a whole lot to do. There's no room for expansion. So really, that's why we're considering it just an annex. What it further does is just ensure that we control the market. You can see the picture below where our assets are. So we have a pretty good handle. I don't want to say that we cornered the market in LaPorte because it's not that big of a market. However, we have a pretty good presence there. Our operations are in line with institutions and REITs. Therefore, we're able to drive revenue and continue to control that market. So just an update on the existing market. So this is in LaPorte. We were following this project prior to acquiring it when we looked at what is the existing demand, where are these markets trending. So this is a project that is complete. The banks, it's considered a luxury apartment community. It opened in October 22. I looked online, they're doing very well. You can see it's a beautiful new property, complete with all the amenities. There's also, and this is 3 miles from our other assets as well. And then there's an additional phase 2 in the works to add an additional 150 units. And you know that we love renters in our markets because they're a big, they make up about like 40% of the utilization of self-storage. Another development is Park Street Community, which is 2.5 miles from our assets there. It's a $12 million housing project, over 100 single-family homes across 34 acres. And these projects are done and already in place. Therefore, the absorption has already started, and it really bodes well for a long-term market presence. All right, quick construction update. So this is one of the other major changes that has happened over the last year. When we started getting more into construction, we were working with a third-party consultant. As we quickly were scaling the number of projects, we realized that we needed to get better and better control of these projects. Over the last 4 to 6 months, we started to evaluate the pace that we were moving, and we looked to find opportunities to where we can not only take better control of the entire accountability chain of construction project, but also increase our competency. These two gentlemen that you see on your screen, Pete McDaniel and Dan Paetzold, they're some of the best in the industry. Both come to us from Extra Space. Fortunate enough where they actually work together. Pete was 22 years in real estate as a real estate developer. He led Extra Space's portfolio in the Midwest and Northeast, which also includes New York. And anybody who knows anything about New York knows it's not easy to get anything done in New York, let alone build self-storage. And Dan recently started, is going to be taking on the project management and overseeing all of these projects. So we're super thrilled to have these guys on the team. This is where the trust lies in our ability to execute these projects. The projects themselves, nothing came easy with either one of them. But if anybody is in, as I mentioned before, if you've done anything in development and construction, you know the entitlement work and the planning work is some of the most challenging and difficult. Okay, so here's where we're at relative to specifically construction with Laurel. So one of the things that we needed to do to get the permits uh, uh, granted properly was to annex the property from the county to the township. And it's, you might say, so what? But what does that mean? It's really jurisdiction. Um, this was like a 4 month kind of pain in the ass process, but something that we didn't necessarily foresee, but it got done. So sharing some of the time delays as well. All the construction design documents are done, fully entitled and permitted. Gerard Construction has been awarded the bid to serve as the general contractor to build out the facility. Gerard, they presented the best bid. We had 5 bidders, all with significant expertise in self-storage construction. They came out on top. Everything is ready in place. Budget numbers have been all but verified. We're going to do another check of those numbers, being that bid was finalized a few months ago now. Now that we're getting closer to having the construction debt in place, we're going to be ready to rock and roll as soon as the weather and ground thaws a bit. Total construction cost for Laurel is just under 4.8 million. LaPorte Mini, very similar story, fully entitled and permitted. Uh, we, this is where what's exciting here is that for any of you that are also part of Growth Fund 2, we were pretty strategic on how we needed to navigate the construction projects in LaPorte. Now, if you're part of Growth Fund 2, you know that we also have 3 other assets that have expansion components. Now, um, when thinking about market saturation and all that, we've got all that covered. There's plenty of demand for this, so that's not an issue. But what we're trying to do is achieve economies of scale by being able to leverage the same subcontractors or the same teams in that market. Again, if you've ever done any development, the more work that you can give a particular contractor, the higher caliber contractor you can afford, and you're able to achieve greater efficiency there. This took a while to kind of figure out. We're very close to now bringing in, and the part to figure out was a lot of the design, budgets, permits. All of that is done. That took a significant amount of time for Growth Fund 2 as well. But we're happy to report we're ready to hit the ground running here. We actually have closed on financing for the construction project here. It was interesting to see a couple of the lenders that bid or that we went out to for financing. We were actually able to negotiate some better terms than the predominant market, just because they like the project. And the construction cost here is 4.9 million. The big difference in the cost to build Laurel and LaPorte really comes down to Laurel being 3 stories for the climate control and the LaPorte being 2 stories. That adds a little bit more for the price per square foot to build. All right, so financing. So talked a little bit about this. Laurel term sheets are at 8.5% and 75% of that stabilized value. Now, just to give you an idea of where we were at last year when we were ready for financing, rates were slightly higher, but the loan to values were much lower. So they were about like 60%. And you don't need to be a mathematician to know that if you're getting higher leverage, that you're getting higher returns. So that was a big part of it. It's not just rate. These are floating rates, and we have every reason to believe, and the market really believes, that the highest of rates are really behind us, and rates are really going to start to normalize and come down a bit. So we're very pleased with the financing that we secured with LaPorte, and now that we're in place to execute with Laurel. They will include interest-only period, 24 months for LaPorte, and we're looking at 18 months. Both of those exceed, it's more than 50% additional time allotted for those. So not that we're looking for additional time needed, but there's a little bit of buffer there to get those done. LaPorte at straight financing, the leader in the clubhouse for financing on the LaPorte Annex is Provident Bank, which is also the lender that financed our Crete project. They're super excited. They've already come in at below 7%, 75% of the purchase price. That's we're going to solidify that over the course of the next week, and then we're closing on the acquisition of that LaPorte property end of February. If there are no other questions, I want to thank you all for your time. Appreciate everyone. Super excited about where we're going with the project, and we'll be sure to keep you all informed.